Yogi, can I get straight to the narrative from the White House, which is open up. We want this economy opening up, back to normal. Yes, people will suffer. People will contract this disease, and unfortunately, people will die. So is that inspired thinking, or is this where the health wheels come off the bus?
You know what? This is cautious optimism. The S&P's gained 30% since its low on the 23rd of March. So a lot of this V-shaped recovery that everybody has been talking about has actually already happened. But I think we do need to be quite cautious. The markets are ignoring Q1 earnings numbers and now focused on Q2, which will be the trough in earnings numbers. Remember, unemployment spiking. We've had 30 million jobs lost in about 6 weeks. Remember, the labour force is about 165 million, so you have to be careful. And, of course, we've got the risk of US-China trade wars re-emerging as well. So there's a lot of things to be careful about, but from what we're seeing going on in the US at the moment, it does look like the worst is behind us. The infection rate spread is slowing. The US is rebooting and slowly reopening. Yep. This will spill over eventually into earnings and things will start to improve. So we kind of agree with what's being said. Cautious optimism.
Yeah, Yogi, great to speak to you today. That said, I understand that rather than a V-shaped recovery, you expect perhaps a W-shaped recovery. So I wonder, with that in mind and the fact that you're still marginally underweight global equities, how you sort of tie that together with the fact you see a trough in earnings in the second quarter.
No, absolutely. The market's expecting this trough in Q2, and we're talking about revenues declining to the tune of around 10% and earnings declining to the tune of around 35%. If the market is expecting that, clearly it will be ugly depending on guidance. Clearly, there are a lot of sectors that have really struggled, like financials and the oil sector. But the reality here is that if you start to see a re-emergence of infection rates because countries have opened too quickly, too soon, then you could well see markets sell off again before they start to increase. So we just think that we've been preaching the V-shaped recovery for quite some time. It's already happened, basically, and we can't help but think that you might well see another sell-off either around Q2 or towards the end of the year when winter comes and infection rates start to pick up again, and markets will probably adjust accordingly. But ultimately, investors are now starting to think beyond COVID-19 cases and the spread of the virus, and they're thinking about what happens to life after COVID-19 is old news. And that's what investors are looking at the moment. They're trying to position themselves accordingly.